Binky Chadha is back with us. He's the chief global strategist at Deutsche Bank. It's good to see you again. Welcome.
Thanks, Cal.
So am I summarizing your views correctly there?
Yes. I mean, I would add that, we think for now, basically, the S&P 500 stays in what I would characterize as a very wide range, sort of between 4,600 and 5,600, 4,600 corresponding to typical sell-off around pricing in a recession. 5,600 corresponds to our estimate of sort of neutral equity positioning. And in the meantime, we have these wide swings. I would point out that we had very wide swings and a big range also in trade war 1.0. And most importantly, I would argue we are at the upper end of the range. And I would argue that the upside's probably capped here because you will get, once the market goes up and things feel a little better, a little calmer, you get a much firmer, stronger tone on the tariffs, which is what we got last evening and this morning.
So let's say we wake up tomorrow and the headline is something about a trade deal with the fill-in-the-blank country. Mm-hmm. You think that might not trigger or garner as much of a positive market response as we think? So,
it depends on the deal, it depends on the country, it depends on how important it is, and it depends on some of the details. But there is a very high expectation that this will happen. We are trading at the top of that range. And I would expect that they have less and less impact over time. But right now, that is where the market is basically
it's already priced in. It's pricing in trade deals.
Some trade deals, I would say.
So how much longer can we wait until it starts selling off? Or is that kind of what's happening today because it's not actually seeing that?
Yeah, I think that's the big question, because the longer we wait, the greater the chances that the cumulative uncertainty, the tariffs themselves, which, it should be very clear, or they're very high, and it's a very large tax, and it actually looks bigger than anything that seems to be on the plate for the new fiscal deal. So they are a big negative, and adjustment to something like that, if they are going to stay and be permanent, is a big deal and will take some time. I think in a lot of the discussion, there's a focus on the foreign exporters, there's a focus on the consumer. But it's really companies, in our view, that are going to bear a disproportionate share. So actually, I would argue that the macro model estimates probably understate the impact, basically, for companies. And that's, we took off $42 from our S&P 500 estimate for this year. And if you just put in 3/4 of that, which is the 3 remaining quarters, you're still talking about $40 for the year. So it's a big number.
Although we're always told, companies are incredibly creative when they'll come up with ways to deal with whatever's given to them. And we have the tax bill kind of also percolating out there and now being kind of pushed or promoted as, as something that will help give them relief. I don't know how much. I think there's some changes, counting changes and that sort of thing.
Right. So, if you just take a very simple measure, because a lot of things are still very open and not very clear what we will get at the end of the day. But, if you look at what's budgeted into the Senate, budget resolution, it's $1.5 trillion over 10 years, so that's $150 billion. But the tariffs, a static calculation is $750 billion, and many of the new, tax cuts don't really impact corporates.
So
directly.
Just to make sure I'm following, so you're saying if the package is $1.5 trillion in size, and again, there's big variance here in what it could land at, you divide that out over 10 years, that's $150 billion of stimulus, let's call it.
Yeah.
But the tariff hit is going to be more like $400 billion.
The estimates vary, and
right.
You start at one end with the static calculation, which is basically the increase in the tariff rate times last year's imports. Of course, volumes will move, so the end result is unclear. But if so dynamic estimates put it at somewhere between 250 and 300. Dynamic simply meaning taking into account what would likely happen to import volumes.
Behavior.
Yeah, exactly. So but that's still bigger than the tax.
Right, it's
cuts,
about double the hit.